Welcome back to Jameel Cast, where we explore ideas and innovations shaping the future of our world. Join us as we uncover perspectives and insights at the intersection of purpose and progress, featuring voices from across Abdul Latif Jameel's international network of businesses. This is Omar, your AI host. We're going to explore the remarkable rise of the Polish automotive market and whether it's truly poised to break from internal combustion engines. Joining us today is our AI guest and friend, Jade, whose insights will guide us through this fascinating landscape. Jade, let's jump right in. We've seen some pretty stark differences in European car sales recently, with Poland really standing out. What's driving this divergence from the more established markets?
It's a compelling picture, Omar. While traditional automotive powerhouses like Germany and France are seeing some stagnation or even mild decline, Poland is surging ahead. New vehicle registrations there jumped by 16.1% over the past year, exceeding 550,000 units. That's against a European Union average growth of around 0.8%.
16% is significant, especially when you compare it to a 3.2% decline in France or a 1% dip in Germany. It certainly paints an interesting picture.
This isn't just a blip either. This positive trend has continued into the current year. The first 6 months of this year saw over 285,000 vehicles sold in Poland, marking a further 3% year-on-year increase. It suggests a sustained momentum.
So we're not looking at an anomaly, but a consistent upward trajectory for Poland. It really puts them in a unique position, doesn't it? Building on that, Jade, what specific factors are really fueling this remarkable growth? What's driving this kind of sustained market expansion?
Well, a significant driver is corporate purchasing. Company vehicles now account for almost 70% of new car sales in Poland, but it's not just businesses. Private customer sales are also surging, with a 34.1% increase in 2024, showing broad-based demand.
70% via companies. That's a huge share. And that private customer growth is pretty impressive too, catching up quickly. Are there specific financial mechanisms at play here that are making vehicles more accessible?
Absolutely. Financing and leasing offers have been pivotal. Some manufacturers are even guaranteeing high residual values, up to 85% over 2 years. This significantly lowers the upfront cost for customers, making new vehicles even more attractive.
Clever tactics, really lowering the barrier to entry. But doesn't guaranteeing such high residual values carry some risk for the leasing companies if market values dip unexpectedly?
It certainly could. While it supports new vehicle sales right now, leasing companies might face financial exposure if actual market values are lower than expected. It's a calculated risk for market share.
Interesting. And what about the used car market? Is that segment experiencing a similar boom, or is it a different story altogether?
The used car market is quite active, yes. In 2024, imports rose by 19.5% to 880,000 units. However, we're seeing a declining value per unit there.
So more volume in used cars, but perhaps a lower quality or less expensive import coming in. And how do broader economic conditions fit into this picture?
Macroeconomic conditions are very supportive. Poland's GDP is expected to grow by around 4%, which contributes to increased consumer demand for vehicles. It's a robust economic backdrop.
So that certainly paints a picture of a dynamic market. Now, building on that idea of shifting consumer demand and new entrants, let's explore how Chinese automotive brands are currently affecting the Polish market. It feels like we're seeing more and more of them, right?
That's absolutely correct. The landscape has changed dramatically. Just 2 years ago, we had exactly one major Chinese brand, and today that number has surged to over 30. It's a significant influx in a very short time frame.
30 brands? Wow, that's a massive expansion. Are these new entrants segmenting the market in a particular way, or are they going after a wide range of customers?
Primarily, they're targeting price-sensitive customers. Often consumers are faced with a choice: a used vehicle from an established brand or a brand new car from a Chinese manufacturer at a very similar competitive price point. It's definitely disrupting traditional buying patterns.
So they're offering new car appeal at a used car price, essentially. And are these primarily electric vehicles, or are they focusing on internal combustion engines for now?
In Poland, the majority are still focusing on internal combustion engine or ICE powertrains. Brands like Omoda, MG, and Bike are among those active in this specific ICE segment.
While that's a key distinction, especially given the global push towards EVs, so it seems they're really capitalizing on that cost-conscious new ICE car niche. But this brings up a bigger question. Given Poles are still gravitating towards ICE, even with new brands, is the Polish auto market truly ready to move beyond internal combustion engines at all?
That's an insightful question. While we're seeing strong overall market growth, the reliance on ICE vehicles in Poland remains really high. Electric vehicles and plug-in hybrids are definitely increasing, with EV sales up over 100% and PHEVs nearly 100% year-to-date in 2025. But, and this is crucial, these increases are from a very low starting point.
So impressive percentage growth, but the actual volume might still be relatively small, you're saying?
Exactly. Currently, we're looking at about 100,000 battery electric vehicles and 92,000 plug-in hybrids in use. When you consider the entire market, EVs account for only about 5% total market share. It shows there's a long way to go to truly break the ice.
That's a pretty stark number, especially compared to some other European nations. Why do you think that transition is proving so slow?
A major factor comes down to economics. Average income levels significantly influence purchasing power. In 2024, the average annual salary in Poland was just above 20,000 euros. This is considerably lower than in many other European countries, making the higher upfront cost of EVs a substantial barrier for many consumers.
That certainly paints a clear picture of the economic hurdles. But speaking of economics, aren't there government incentives designed to help bridge that cost gap for EVs? What's the landscape like there, Jade?
Absolutely, Omar. The Polish government has indeed rolled out financial incentives to support EV adoption, which is a crucial piece of the puzzle. Buyers can currently receive subsidies of up to 30,000 Polish zloty, which is just over 7,000 euros, for an EV purchase. It's a significant chunk off the initial price.
And has that program evolved at all? I seem to recall some updates.
It has, under updates to the Nasze Auto program, explicitly from October 2025, eligibility expanded beyond just individuals and sole traders. Now, organizations like NGOs, public institutions, and other service providers can also tap into these subsidies, broadening the potential pool of EV owners.
That's a smart move to encourage fleet adoption, I imagine. Are the subsidy levels uniform across all vehicle types?
Not at all. The subsidy levels are actually quite dynamic and vary significantly by vehicle type. You can see up to 40,000 Polish zloty for family cars, which is quite generous. For light commercial vehicles, it jumps even higher, up to 70,000 Polish zloty, and for passenger buses, there's a substantial incentive of up to 600,000 Polish zloty.
Wow, those mass passenger transport bus incentives are really substantial. So, is there any data on how effective these incentives have been regarding uptake?
We're seeing decent traction. Over 16,000 applications have been submitted for these incentives, totaling over 500 million Polish zloty. It shows people, and now organizations, are definitely looking to leverage these benefits, despite the broader economic challenges we discussed earlier.
We have covered the incentives, and they sound pretty robust. But Jade, even with all the financial help, if you can't charge your EV easily, it's a non-starter for many. So let's turn our attention to the charging infrastructure. How's Poland shaping up in that regard?
That's a critical point. Charging infrastructure is absolutely key. Poland actually has a decent base, with more than 10,000 EV charging stations currently, and that number is projected to double within the next 2 years. What's encouraging is that many new installations are high-power DC chargers, often in the 80 to 150 kilowatt range.
So quicker charging times then, I assume?
Precisely. Those higher power chargers mean you're looking at approximate charging times of around 20 minutes, which is a game changer for convenience. We're also seeing good expansion in urban centers. Warsaw, for example, has more than 800 charging points, and other major cities like Gdansk, Krakow, Poznan, and Szczecin each boast more than 300.
That's promising for city dwellers. What about longer journeys along the major transport routes? That's often a big concern for potential EV buyers.
It definitely is. And it's an area where development is ongoing. Currently, 13% of highways on the Trans-European Transport Network in Poland, the 10T, already meet the EU requirement of having a charging station every 60 kilometers. There's also significant support, with a program backed by the National Fund for Environmental Protection and Water Management, pushing 1 billion Polish zloty into expanding high-speed charging infrastructure.
That's excellent news for accessibility, but infrastructure is only one piece of the puzzle, isn't it? What about the vehicles themselves? We've heard a lot about range anxiety in the past. How's vehicle technology evolving to address those concerns?
That's right. Vehicle technology, particularly battery advancements, is making huge strides. Range anxiety, while once a significant barrier, is becoming less of an issue. We're seeing a new generation of EVs hitting the market with impressive capabilities.
So, what kind of performance are we talking about now?
Well, newer EV models are really pushing the boundaries. It's not uncommon to find vehicles now offering driving ranges of 500 to 600 miles on a single charge. That's a significant leap from just a few years ago, effectively putting long-distance travel well within reach for many drivers.
Really? 500 to 600 miles? That does change the perception of what an EV can do for a daily commute, or even those longer holiday trips. How is that impacting consumer confidence, do you think?
It's a massive confidence booster. When an EV can match or even exceed the range of an internal combustion engine vehicle on a full tank, it removes a major psychological hurdle. This expanded range, combined with the faster charging we just discussed, makes the transition to electric far more practical and appealing.
One, that's a strong point about consumer confidence with those improved ranges. But even with great tech, market development often hinges on strategic partnerships, doesn't it? How are partnerships currently supporting Polish market development for EVs?
Strategic partnerships are proving crucial for bringing these advanced technologies to market. For instance, Jameel Motors has been instrumental, forging distribution agreements with major Chinese automotive manufacturers to introduce new EV models into Poland. This really diversifies the offerings for consumers.
Interesting. So specifically, what kind of partnerships are we seeing and with whom?
Well, one key partnership is with GAC. This collaboration is enabling the launch of their Aeon range of electric vehicles, and also their premium electric brand, Hypetech. We're talking about models like the Aeon V, Aeon Y+, and the Hypetech HT, all boasting impressive ranges of up to 520 kilometers per charge. That's a significant infusion of new EV options.
520 kilometers is very competitive. Are there other notable agreements?
Yes, there's a separate, equally significant agreement with Geely Auto. This partnership focuses on introducing their Geely EX5 electric SUV, along with a plug-in hybrid vehicle in the CSUV segment. What's particularly noteworthy here is that these vehicles are built on Geely's Advanced Global Intelligent Electric Architecture, or GEA, platform.
So it's not just about getting cars to market, but bringing in advanced platforms too. Building on these developments, what's the overall outlook for the Polish automotive market right now, particularly with these new partnerships and technologies coming into play?
The Polish automotive market is definitely in an expansion phase, Omar. We're seeing sustained growth fueled by a strong economy, accessible financing options, and increasing competition amongst manufacturers. This creates a really dynamic environment for both consumers and businesses.
That's positive. And how does that expansion look in terms of the shift towards new energy vehicles? Are we seeing significant movement there?
While EV adoption remains limited in terms of overall market share, growth rates are high. Subsidies, ongoing infrastructure development, and improvements in vehicle technology are all playing a crucial role in accelerating this transition. It's a very exciting time for new energy vehicles in Poland.
So, manufacturers are responding to this changing landscape, I imagine.
Definitely. The market supply chain is collaborating together. manufacturers and distributors are rapidly expanding their vehicle portfolios, offering a wider range of both traditional internal combustion engine models and an increasing number of electrified options. The market is continuously evolving, adapting as these key factors mature and influence consumer choice.
So it sounds like Poland is poised for continued growth in both traditional and electrified segments then.
That's right. Poland remains one of Europe's fastest-growing automotive markets. We expect to see continued development across both conventional and electrified vehicle segments, making it a very interesting space to watch in the coming years.
So, what's our main takeaway today? Despite Poland's impressive auto market growth driven by strong economic factors and corporate purchases, the transition to EVs is still in its early stages. While incentives and infrastructure are improving, the higher upfront cost of EVs for an average Polish consumer means ICE vehicles, especially from new Chinese brands, remain dominant.
Indeed, the Polish market is vibrant and expanding, but breaking the ice entirely demands continued innovation in affordability on both the vehicle and charging fronts.
That's all the time we have. Thank you for joining us, Jade, for your incredible insights, and thank you, our listeners, for tuning in. We hope this episode sheds some light on the fascinating dynamics at play.
You've been listening to Jameel Cast, the official podcast of Abdul Latif Jameel. For more insights and conversations shaping our future, follow us wherever you get your podcasts or visit alj.com to read our Perspectives articles. Thank you for joining us, and until next time, stay curious.